Happy morning, sir.
Hi Bala, Abhirami, Shiva, hi.
Good morning, sir.
Good morning everyone. Smriti, good morning. Okay, I think we can start now.
Happy morning, sir.
Hi Bala,
Happy morning, Bala.
Abhirami, Shiva, hi. Oh,
Good morning, sir.
good morning everyone. So, guys, you're listening to the YouTube volume. Okay, am I audible now, everybody? Abhirami, good morning. Am I audible, Bala? Good morning.
Yes,
Sir.
sir.
Okay,
Yes, sir.
good. Very good morning, everyone. So, how are you all? So, let us start with I believe that you have done your PGBP yesterday, and I'm sure not many students might not have done that. The second question, which I've given it to you, try to do that questions. It is of receipts and payment account. And although it is not difficult, but still, if you find it difficult, so today I'll not take it, but with the total income questions, I'll take such questions of receipts and payment account also, right? I believe that you might be knowing it, something of out of it at least. But don't worry, we'll be doing with the total income questions as well. So today, so we are not disturbing our schedule. We'll go as per the schedule. So today we'll be doing the capital gain first from the study material questions. So we'll be doing 2-3 questions from the study material. Again, tomorrow also we have 3 days allotted for the capital gain. So everybody, give me a moment. Just give me a moment, guys. Okay. So let us start. The question number one, this is page number 3.471 of your study material. Test your knowledge on knowledge questions. It says, Mithun purchased 100 equity shares of Messrs. Good Money Company Limited on 1/4/2007 at rate of 1000 per share in a public issue of the company by paying STT. So he has paid STT and these shares were purchased in the year 2007. So we understand if STT is paid, it means that they might be sold because they are giving an indication that STT is paid, this might be sold on stock exchange. So we understand whenever these shares are sold on stock exchange, if they are short term, then we have 111A, right? And if it is long term, we have 112A. So I believe it would be long term because 2007 we have hold it. Can you tell me what is the holding period for the listed securities? What we take for the listed securities when it becomes
1
long
year.
term?
1
It
year.
is 1 year. Very nice.
Old ones.
So it is after 1 year, it becomes a long term. So 2007, probably he's selling it this year, it will be long term capital gain. Company allotted bonus shares. Company allotted bonus shares in the ratio of 1:1 on 1/12/2023, and he was also received dividend of 10 rupees per share on 1/5/2024. Okay, so he has received bonus shares in the ratio of 1:1 in the year previous year 23-24. He has received these shares 1:1. So please tell me how many shares he were having originally. 100 shares he were having previously, original shares, and he received 100 more shares. So 100 more shares he has received it. So can we say that after the allotment of bonus shares, the total number of shares which he has is how many? 200. Everybody okay with it? And after that, when he has received the dividend, please tell me how much dividend he has received? 10 rupees on 1/5/24. In our year, he has received the dividend 10 rupees. Please, can you tell me what type of income it is and how much would be your income? Everybody tell me.
2000 IFRS income.
So it is correct. Very nice. So 200 shares are there, or 100 original, 100 bonus shares. And after that, we are getting dividend. So it means on 200 shares, we'll get the dividend, correct? Into 10 rupees each. So 2000 would be our IFOS income. Correct. Look at the. Sugandha, correct. Now, he sold all the shares. Okay, first, what we need to compute, guys? Compute his total income. We need to compute his total income. And we understand that they are actually talking about shares and he is also selling it. So capital gain would be there, IFOS would be there. As of now, I know about two income. Compute his total income and also his tax liability for assessment year 25-26. If Mr. Mithun pays tax under default tax regime, okay, he's not falling optional. And in capital gain, guys, there is no difference between optional and default regime. Capital gain is 100% same. Assuming that he is having other income of 8 lakh, or we need to compute his tax liability, assuming that apart from this income, he has 8 lakh rupees income also. Fair market value of the shares of Good Money Company Limited as on 31st January 18 is 2000. Okay, they have given us of 31st January 18. You know why they have given it to us. I'll be again discussing this. Now, he has 200 shares. He has received dividend of 10 rupees per share. Now, he sold all the shares on 1/10/2024. In this year, he sold all the shares at the rate of, please tell me, on 1/10/24, he has sold all the shares. He has sold 200 shares. The original 100 were bought in the year 2007 and we are selling it now. It has been such a long period. So it is a long-term capital gain. What do you think about these 100 shares, the bonus shares on this? It would be long-term. The answer is no, because the 1 year has not yet completed. Correct? Everybody correct? So 1 year is not completed. So we will have short-term capital gain. And where are these? All the shares are getting sold, recognized stock exchange. So we understand for long term, we'll have a section 112A, and for short term, we'll have 111A, special rate of taxation. Okay. Sorry. And he's selling all the shares at 4,000 per share through a recognized stock exchange and paid brokerage of 1%, and securities transaction tax he has paid 0.02%. Please tell me whether brokerage is an allowable expense. Can we treat it as an expenses on transfer while computing capital gain?
Yes, sir.
Yes.
Brokerage is allowed. Very nice. Brokerage is allowed. See, how we compute capital gain normally: full value of consideration minus cost of acquisition, cost of improvement, expenses on transfer. So brokerage is allowed. And what about this STT? Whether it is allowed in capital gain?
No, sir.
No, STT is not allowed. So in capital gain, if you are computing capital gain and if there is an expense of STT, it is not allowed. But however, for PGBP, if this would have been a PGBP income, then STT would have allowed. And generally, when we have this PGBP income regarding shares, generally for intraday trading, we have speculative PGBP. There STT can be allowed because in section 36 of PGBP it is written that STT can be an allowable expense. But in capital gain, we don't allow it. Okay. So compute his income. So as of now, he has only capital gain income and he has IFOS income. And there is some other income also, 8 lakh rupees given to us. Okay. Now tell me, guys, since you understand that in capital gain, there in this year, in previous year 24-25, there is a major changes in the rates of capital gain which has happened during the year. During the year on the budget date from 23rd of, and you should know this date, 23rd of July 2024, on or after this date, some rates of capital gain have changed. Please tell me, these shares are sold before this or after this? Pre-budget or post-budget?
Post-budget.
These shares are sold post-budget. So for post-budget, we have different rates. So what are the rates for 111A, guys? Do you understand what are the rates for 111A?
20%.
For 111A, post-budget, it is 20%, and pre-budget, it was 15%. If this would have been pre-budget, I would have applied 15%. On 112A, the post-budget is 12.5%. But pre-budget, it was 10%. Correct? If you want, you can write it somewhere. So for 111A, That is short-term capital gain on equity shares or equity-oriented units which are sold on stock exchange. Now we have 20%, but earlier we have 15% before the budget. Had the transfer took place before or on or before 22nd of July, even on 22nd July, old rate, but on 23rd of July, new rates. 112, that is long-term capital gain on equity shares or equity-oriented units, 12.5. Earlier it was 10. Although we don't require it here, but still we can write it on 112. What is 112? Other long-term capital gain, all other long-term. See, 112 is just long-term on equity shares or equity-oriented units, which are sold on stock exchange. But all other long terms, like let's say we have sold land, we have sold gold, we have sold any other thing, then it is 112. And what is the rate post budget, guys? Please tell me what is the rate in 112?
12.5%.
It is same 12.5%, but earlier it was 20%.
20%.
Very good. Earlier it was 20%. So these are the rates which you should know. So it happens, this is a problem. It happens with the election year. And unfortunately for our examination, that election year is coming up. Okay, no problem, but it is not that complex also. Now, you also know. Yes, please.
So can you repeat the point about SCT alone?
Okay, sure. Regarding the expenses allowed?
Yes, sir.
Don't worry, I'll be repeating again with the question. Don't worry about it.
Okay, sir.
Okay. So now let us compute his income. So he has capital gain, he has IFOS, and he has some other income also. Everybody with me. So this is page number 3.471 of your study material. Solution 1. This is your study material question. We need to compute computation of total income and tax liability of the name of the assessee is Mr. Mithun, and assessment year is 25-26, and which regime he is following? What we have read, default regime. So he is following default regime. So he is having an income from capital gain, IFOS. He does not have income from salary, PGBP or house property. Income under capital gain. Guys, since he has short term also, long term also, so the calculation here, I'll be doing it, so there would be a little hodgepodge. So it is better to keep it neat and clean. So for working note, for capital gain, we can make a working note separately. And he has his IFOS income also. So that is dividend income he has. We understand it was 2,200 shares. Right now, 100 shares earlier, 100 shares now. So he has 200 shares into 10 each. So 2,000 is the dividend income that will go in IFOS. And also other income is given to us, and they have not mentioned that whether this other income is house property, whether this other income is PGBP. So we can make our own assumption. So normally we will take it IFOS. So safely we can take that is other income. How much they have given? I believe 8 lakh they have given, na? Right? 8 lakh rupees. So they have given 8 lakh rupees. So still I'm writing it over here that other income, we are assuming that it is IFOS. It is assumed that it is IFOS. So his IFOS income, we understand, it is now 8,02,000 rupees. And now we need to compute his capital gain. And once capital gain will be computed, we'll get our GTI, gross total income. After that, chapter 6 deductions. But I don't think that there is any chapter 6 deductions there's in this question, so it would be 0. And then we'll get our total income. Please tell me everybody has written till here or not.
Yes, sir.
Very good.
Sir.
Very, very good. Okay. Now, let us jump into capital gain. How capital gain is computed. So I'll not do it here because I have to calculate my tax liabilities also. So tax liabilities also have to calculate. So let us make a working note on the next page. Working note 1, capital gains. Now what he's selling shares, and actually 100 shares are long term, 100 shares are short term. So we have to make separate columns for that. So 100 shares, they were original shares, and 100 shares, they were bonus shares. So why I'm doing it separately? Because there would be a separate long-term and short-term capital gain on this. What is the full value of consideration? So how much we are selling it for? I believe 4,000 rupees we are selling it for. So they were telling me that I have sold for, yes, 4,000 per share. So at rate of 4,000 each. So here it would be 100 shares into 4,000, 4 lakh rupees. Here again 100 shares into 4,000, that is 4 lakh rupees. Less cost of acquisition. Cost of acquisition. See, let us first talk about these 100 shares. Because these 100 shares are long-term capital gain. If you don't remember the section 112A, it is okay. Don't quote that section number, but you should know that how you will applying it. So since it is long-term capital gain and that too 112A. Nishi, are you clear with this? This is 112A.
Yes, sir.
Okay. Now, we understand regarding 112A, if you remember what I have told you in the classes, I have told you that earlier, before 2018 budget, 2018, when Arun Jaitley, Arun Jaitley was the finance minister, before that, whenever we sell our long-term capital gain, whenever we sell long-term equity shares on stock exchange, it used to be exempt. It used to be exempt. But in the budget of 2018, the budget was presented on 1st February every year. So on 1st February 2018, he announced that now we will be taxing our long-term capital gain shares also, long-term equity shares also. And he told that at that point of time that 10% will take the rate on that particular shares. And he was saying at that time that in excess of 1 lakh, we will tax it. So he has made from 1st February 2018, he said that now it would be taxable at 10% in excess of 1 lakh, which Mrs. Nirmala Sitharaman in this year budget, she has changed a little bit. Now it is not 10%, it is 12.5%, and it is not in excess of 1 lakh, it is in excess of 1,25,000. Correct? So if any transfer which has taken place before the budget, that is on or before 22nd of July, please apply 10%. If any transfer is taking place on or after the budget date, that is 23rd of July 2024, please apply 12.5% rate. But please, for the entire year, don't give this 1 lakh rupees of exemption. You have to take 125. Whether you are transferring it before, whether you are transferring it after, please tax in excess of 125. 125 is common to both, right? Because this is an annual amount of deduction, right? So this is an annual amount of deduction. So we cannot keep it before budget or after budget. So income tax said 1,25,000 for the entire year. Okay. Now, the second important thing which we know about 112A, 112A says, because earlier it was exempt under section 10. Earlier it was exempt, but Mr. Arun Jaitley suddenly brought tax on it. But he said that I'm not just bringing tax on it, I'm giving the relief to the people. I'm giving relief to the people of India, those who were unaware, those who were aware actually that it would be exempt, but now it is taxable. So when they have purchased it, it was exempt, but now they will be selling it, it will be taxable. So it would be a hardship on them. So we are giving a relief to those people. Guys, this relief was not given to the people who are purchasing the shares after Mr. Arun Jaitley's budget. So those who are purchasing on or after 1st February 2018 budget, the relaxation is not for them. The cost for them, the cost is actual cost only. But the relaxation is for the people who have purchased the shares before this date. So please tell me, out of these shares, what are the shares which are allotted before this date? These shares were allotted in 2007. That is much before 1st February 2018. So what we have here, we have a special provision that we call a grandfathering provisions. So what we have, what is the cost of acquisition we take? We take A. Do you all remember, guys? Actual cost of acquisition. Everybody remember this? We have done this in the class. So actual cost of acquisition of the shares. B. Actually, B has two parts. B, we take B1, fair market value of the share as on 31st January 2018. Fair market, just one day before the budget. Fair market value as on 31st January 18. And B2, first compare B1 and B2. B2 is actually the actual selling price. So we have discussed this in detail in the classes. So this is fair market value on 31st January 18 and the selling price. First take whichever is lower. First take whichever is lower, B1, B2, whichever is lower. And then you have to take whichever is higher. Are you able to recall this provision, guys? Everyone?
Yes, sir.
Good.
Yes, sir.
Good. Now, let us talk about this because this is 112A. So what was the actual cost of the shares? So just see that what was for one share, we'll see. He has purchased this share for 1,000 rupees. So the actual share cost of the shares was 1,000. So actual cost of the share was 1,000 rupees. Okay. What is the fair market value on 31st January 18? So they have given us somewhere in the value as on 31st January 18, that is 2,000 rupees. So it is fair market value is 2,000. And how much is the selling price? We are selling it for 4,000. So first what we will do, B1 and B2, whichever is lower. So 2,000 and 4,000, whichever is lower, 2,000. And then we will compare it with the actual cost, whichever is higher. So 2,000 or 1,000, whichever is higher, 2,000. Everybody got it? So here my cost, my benefit, although I have purchased it for 1,000 rupees, I have purchased it for 1,000 rupees, but now I have a benefit that I can take the cost as 2,000 rupees. So my cost would be 2,000 rupees per share into 100 shares. So it would be 2 lakh. Correct? So this is my cost of acquisition minus expenses on transfer. Expenses on transfer. So we have two expenses on transfer. One is brokerage and other is STT. Now Nishi, understand that brokerage is allowed. If you pay brokerage, it is allowed. How much brokerage you are paying? You are paying a brokerage of 1%. So if nothing is mentioned, obviously 1% the selling price. So 1% of 4 lakh. So it would be 40,000 rupees. No, 4,000 rupees. Correct. 4,000. And STT, securities transaction tax, not allowed. It is not allowed in capital gain. So STT, we don't allow it in capital gain. Had it been, STT is an allowable expense if it is a PGBP expense. So I'm repeating what I have said earlier also. So if it would have been a PGBP expense, then we can allow it. How it can be a PGBP expense? So let's say if we are daily, intraday, we are doing an intraday trading of shares. We are selling the shares in the morning. We are purchasing, we are selling, we are purchasing, we are selling. At 9:30, the market gets open. Sorry, at 9:15 until 3:30, the market is open Monday to Friday. So if in this window, I am purchasing, I am selling, I am purchasing, I am selling, that is called intraday trading. Whether the shares will come in my demat account, no. I am just actually targeting on the fluctuation of the price. What I am doing is I am trying to make a speculative profit. So we understand that this income or loss, whatever it is not a capital gain or capital loss. It is actually a speculative PGBP income or a speculative PGBP loss. Correct. So if I am having a speculative PGBP intraday trading, because since I am trading on the stock exchange, I would have paid STT also. In that case, STT is a capital gain expense or a PGBP expense, Nishi? In that case, it would be a PGBP expense. So it is allowed in PGBP. So section 36, that is other deduction, says that STT is allowed in PGBP if it is a PGBP expense. But if it is a capital gain expense, it is not allowed. Are you okay with that now?
Yes, sir.
Okay. So this, I got my long-term capital gain. So whether 112A is indexed, so should we index 112A? No, 112A is never indexed.
No, sir.
Whether it is pre-budget, whether it is post-budget, it is never indexed. 112A, when 112A was introduced, Mr. Arun Jaitley said that we are giving you a very low rate of 10%. We are giving you such a benefit of 10%. So that is the reason we will not give you that benefit of indexation. So 112 is never indexed. Even it is pre or post, doesn't matter. Okay. 4 lakh minus 2 lakh minus 4,000. So it makes 1,96,000.
1,96,000.
So this is long-term capital gain, and that too 112A. Even if you don't remember this number 112A, it is perfectly fine. But this is long-term capital gain. And similarly, now let us do for the bonus shares. Let us do for the bonus shares. First of all, tell me what is the value of the bonus shares. Please tell me what is the cost of the bonus shares.
0.
Zero. Correct. So the cost of acquisition of bonus shares is 0. The only criteria is that if they are allotted before 1/4/2001, if the bonus shares are allotted before 1/4/2001, then what we can take? Tell me, everybody, tell me, please.
We can take fair market value of
Fair
We
market
can
value.
take the fair market value of
2001.
this date. Very nice. Everybody on YouTube, please tell me. So we can take the fair market value as on 1/4/2001. But if they are allotted after this date, we'll take the value as 0. We'll take the value as 0. So first of all, tell me. Now there is one more point actually which I would like to discuss. But tell me, when are these bonus shares allotted? When are these bonus shares allotted? On 1/12/2023. Okay. Much after 1/4/2001. So we'll not take the cost as fair market value. We'll take the cost as 0. And also these shares are allotted. Please tell me, before Arun Jaitley's budget or after Mr. Arun Jaitley's budget?
After.
So the people who are purchasing their shares after Arun Jaitley's budget, they all know that this capital gain will be taxable. So this benefit, that grandfathering provision where we have taken the fair market value on as on 31st January 18, it is available only to those shares which are purchased on or before this date. Because on and before this date, people of India were unaware that on these shares there will be tax also. But if somebody is purchasing after this date, then everybody knows, because after this date on 1st February 18, budget was announced. So we are assuming that everybody knows, everybody in India knows that now there would be a capital gain on these shares. So any shares which are acquired after Mr. Arun Jaitley's budget, this grandfathering provision is not allowed. So what we will take? Your actual cost only. That's it. We will not take this fair market value, selling price, etc. We will take your actual cost only. So tell me, what is the bonus shares actual cost over here? The answer is nil, because it is purchased at nil value. Now, I have a question for you, although it is not relevant for this question, but yes, it is 100% relevant for our examination. Had these bonus shares been allotted, let's say before this date, before 31st January 18, these bonus shares would have allotted. Let's say somewhere in 2017. Let's say somewhere in December 2017, these shares were allotted. Obviously, the cost is zero. So what is the actual cost? Zero. Why? Because these are bonus shares. Can we take the benefit of the grandfathering provision then? Please tell me, can we take the benefit of grandfathering provision then? The answer is
No.
Yeah.
yes or no? The answer is yes. Why
Yes.
not? Because anything, all the shares which are before the Arun Jaitley's budget are entitled for grandfathering provision. So in that case, these bonus shares also would have got their cost. How? Actual cost is zero, but the fair market value is on 31st 18. We would have taken this. The fair market value or the selling price, first whichever is lower, let's say fair market value is lower, then we will compare with the actual cost, whichever is higher. In that case, we can take the fair market value as on 31st January 18. Had it been acquired before Mr. Arun Jaitley's budget. Everybody understood? So please don't make a mistake here. So bonus shares, generally we take nil. Everybody knows, all students knows that sir, if bonus shares are issued before 1st April 2001, we can take the fair market value. This everybody is known. But most of the students, where they make a mistake is that if it is, let's say, this provision is getting applied. If this provision is getting applied, and this provision gets applied where? When the shares were acquired before Arun Jaitley's budget. That is before 1st February 2018. So if this bonus shares had been before, then I would have applied the grandfathering provision also. Please tell me, have you understood or not?
Understood, sir.
Okay. Everyone? Okay. Yes. Sugandha, you can say that there are two cases where there can be some cost of acquisition, either acquired before 1st April 2001, then the cost could be there. Second, if they are getting sold on stock exchange and they are acquired before, they are allotted before Mr. Arun Jaitley's budget, then there are chances. Okay. And the brokerage is 1% here itself, 4,000 rupees. And STT we will not allow. So here, guys, please don't write it here because this column is long-term capital gain, right? Don't write it here. So I've written a dash over here. I'll write in the second column. This is short-term capital gain, that to 111A. It is 3,96,000. So how much is the total capital gain? Total capital gain comes to
5,92,000.
5,22,000.
92, sir.
92. Okay, my mistake. 5,92,000 is the capital gain. Everybody done till here? Now let us take this 5,92,000 in my main answer. So this is 5,92,000. $592 plus
13,94,000, sir.
13,94,000. So this is my total income. So the first part, they have asked about the total income, we have done. Now let us compute the tax liability on tax one above and as per the default rate. But first, please tell me, do we have any special income also? Do we have any special income also? Remember how I have actually, we were discussing that how we'll be calculating the taxes. So first on the special income. So first, what is the first special income on 111A? Do we have 111A over here? Yes. On 111A, how much is 111A? It was
3,96,000.
396,000 and 196. It was 3,96,000. My second is 112. We don't have any 112. The third is 112A. On 112A, it is 1,96,000. Then we have
Minus 1,25,000.
correct. So we have casual income, but we don't have casual income here. Then the remaining income. How much you are telling? 8,02,000. This is the remaining income. Okay. Now, guys, there is no unexhausted basic assumption limit also. My remaining income is more than the basic assumption limit. So there is no problem of movement also. Now, 111A. 111A, we understand it is taxable at a rate of 15% or 20%. It is getting sold after the budget.
20%.
So about 20%. And 112A, we understand we tax at 12.5% in excess of 125. So first we will deduct 1,25,000 from here, and then we'll apply 12.5%. And on 8,02,000, it would be slab rate as per the default regime. Got it? So this would be 3,96,000 into
79,200.
This is 79,200. 96 minus 120.
8875, sir.
8875. Correct, Sumanyu. And on 8,02,000. So we have first 3 lakh, next 4 lakh, and next 1,02,000. So it is nil.
30,200, sir.
So this we have 5%. This we have 10%. So how much you are saying? 3,200.
Yes, sir.
That's it.
No, sir. 30,200, sir.
30,200. Okay. So let us see how much it is.
1,18,275.
1 lakh, very nice. 1,18,275.
75.
Plus, will there be any surcharge? No. Will there be any rebate?
sir.
No. So this
No, sir.
income is not more than 50 lakh. There is no rebate. This income is not more than 7 lakh because it is not less than 7 lakh also. 7 lakh limit. So plus simply 4% health and education cess.
4731.
4731. Add them up.
1,23,000.
1,23,006.
6 rupees. And this is our tax liability. And we need to round it off. Zero, 1, 0.
10.
Correct. Correct, Vichy. Everybody tell me, have you done this?
Yes, sir.
Yes, sir.
Good. Let us come to the next question of capital gain. Okay. Question number 2. Arav converts his plot of land purchased in July 2004 for 80,000 into stock in trade on 31st March 24. So we understand that if there is a capital asset, since it was a capital asset we have purchased in 2004, and whenever we convert this into stock in trade, so conversion of capital asset into stock in trade is also regarded as transfer. So this transfer 31st March 2024, which year it is? This is previous year 23-24. We have converted our capital asset into stock in trade. Although it is a transfer, but as of now we'll not make it taxable. We understand that there is a provision in capital gain precisely section 45.2. If you don't remember the section number, that is fine. But that 45.2 tells us, section 45 subsection 2, it tells us that whenever there is a capital asset converted into stock in trade, we will not tax it right now. We will wait till it is actually sold. So in the year of actual sales, there would be capital gain also, PGBP income also. How we'll compute the capital gain? So whatever is the conversion date, whatever is the fair market value, we will take it. Okay. The fair market value as on the conversion date. See, on 31st March 24, we have converted. So the value as on conversion date, 31st March 24, they have given 3 lakh. The stock in trade was sold for 3,25,000 in the month of January 25. So we have sold the stock at 3,25,000 in January 25. So January 25 is previous year 24, 25. So in this year, what we will have, we have two incomes. One is PGBP also, because what are we selling? We are selling stock, and the capital gain which we have deferred, we are going to tax it now. Okay. Find out his taxable income, if any, and if so, under which head of income and for which assessment year. So it's a very simple question. So what you will do, please write it over here. Question number 2. Conversion of capital assets into stock in trade is regarded as transfer. And it becomes taxable in the year when actual stock is sold. So it becomes taxable in the year in which it is actually sold. So it is actually getting sold. It is although converted on 31st March 2024, but now it is actually getting sold in January 25. So now the capital gain will arise in previous year 24-25, January 25. Please tell me, guys, please tell me, here we are on January 25. What are we selling? We are selling capital asset or we are selling stock in trade?
Stock in trade.
Stock in trade.
Okay. But the transfer date of capital asset was, this is the transfer date of the capital asset, or this is the sale date of the stock? It is the sale date of the stock, right? What was the transfer date of the capital asset? The transfer date of the capital asset is what?
31st March 24.
Correct. The conversion date. So this is actually the transfer date. So this 31st March 24, it is actually, for capital gain purpose, it is the transfer date. So generally we understand as soon as you transfer, capital gain arises, but there are few exceptions and this is one of them. There are 3 exceptions and this is one of them. In this case, we will not tax you right now, because as of now, you have just converted your capital asset into stock in trade. What does it mean? You are just having a land, and from now on, you are just change the name of the land. Now you say that it is your business use. Now you are actually using it for your business purposes and you will be selling it. Now, in this case, you have just changed the name. As of now, you have not gained anything. So on conversion, you have not gained anything. You have just converted. You have just changed the name. But whenever you will be selling it, then there would be a capital gain. We will be arising it over here. Okay. Can you tell me what is the date of transfer for the capital gain purpose? What is the date of transfer? Selling date or 31st March? And you all told me
31st March.
Please tell
31st
me
March.
now. Please tell me the transfer took place. The transfer. See, capital gain is taxable. That is another story. But please tell me the transfer took place on 31st March 24. It is before Nirmala Sitharaman's budget or after that? Pre-budget or post-budget?
Before.
Post budget.
It
Pre-budget.
is pre-budget.
Oh,
It is pre-budget, Bala, because the budget date was 23rd of July 2024. So it is before the July date. So tell me, if it is before the July date, and what we are doing is we are selling land, and this land was purchased in 2004. Please tell me, very nice. Indexation will be there or indexation will not be there?
Will be there.
Indexation
Will be there.
Will be there.
Indexation will be there. Why? Because although we are just taxing it right here, we are just taxing in 2025. But what did Mrs. Nirmala Sitharaman said during her budget speech? She said that any transfer which will be taking place from now on means on 23rd July 2024, any transfer which will happen from now on. But in this case, the transfer has already happened. The transfer has already happened. We are just waiting that whenever it will be sold, we'll just make it taxable. That's it. But the transfer has already happened. So in this case, it is actually sold before, it is actually converted before the budget. So what do you think? If it is actually converted before the budget, whether indexation will not be there or indexation will be there? Indexation will be there.
Will be there.
Okay. Find out the taxable income, if any, and if so, under which head of income and for which assessment year. So that's simply, please tell me, are they asking us to compute the tax liability? No. So find out the taxable income, if any. So we just have to find out the taxable income and we have to show under which head we are having this income. Okay. Now, so in this previous year, 24-25, we will have a capital gain also, we will have a PGBP also. So first of all, let us compute the capital gain. Full value of consideration. What is the full value of consideration? Are we selling it for rupees 3,25,000? Is that a full value of consideration for capital gain purpose, or the
No,
value
sir.
on the conversion date?
Market value.
Value of conversion date.
And value on the conversion date was how much? 3 lakh.
3 lakh.
So value on the conversion date was 3 lakh. So we'll say full value of consideration is 3 lakh minus, since it is a very old thing, so it would be minus index cost of acquisition. We are selling in 2024 and it is acquired way back it is acquired in July 2004. So we will do the indexation. How we will write index cost of acquisition is CII
3
of the year of transfer
divided by
upon correct CII
say
of the year of
purchase.
acquisition into cost of acquisition. Now, some students make this mistake that in the numerator, they take the CII of this year. Guys, this year is a taxable year. But what is it? It is written in the numerator, CII of the year of transfer, when this capital gain is transferred. So capital gain was already transferred on 31st March 2024. So we have to take the CI of this year when it is transferred. So here we are actually selling it, but here what are we selling? We are selling stock. But the capital gain identity, capital asset identity lost when we have just converted. So for the transfer date, this is the date. So what is the CI of this year? We understand 363, but we don't have to take for this year. We have to take for previous year 23-24. Please tell me what is the
348.
348. So we will say cost of acquisition, in fact, indexation cost of acquisition, 348 divided by CI of the year of acquisition. So when we have acquired it, we have acquired it in 2004. They will give you the CI also, 130 into cost of acquisition. How much was the cost of acquisition?
80,000.
80,000. So this would be 348.
2,46,371.
Okay.
372.
372.
2,46,372. Here round off. This is the cost of index cost of acquisition. Index cost of improvement, there is no improvement, and generally here would be no improvement here in this case. So though no improvement thing is given to us. So this is land. Improvement could have been possible, but in this case there is no improvement. Expenses on transfer, so there is no expenses on transfer also. How much is the long-term capital?
53,628. sir.
53,628. This is long-term capital gain under section 112A or 112.
112.
112A is only for the shares, equity shares on a stock exchange, but it is all other long-term is 112. And what do you think? It is taxable at what rate? What do you think? It is this transfer is post budget or
12.5%.
this transfer is post budget or this transfer is pre budget? This, although you don't have to calculate the
Pre-budget.
taxes rate, but this transfer is pre budget. So you have to apply old rate,
20%.
that is 20% of 112. Understood? Although you don't have to calculate it, you don't have to show this also. But in case they would have asked it, so this would have been 20%. Okay. Guys, do we have they have asked me that under which head we will be having the income and how much. So we'll say in capital gain long term, this assessee would be having this income. And there would be a PGBP income also. How much is the PGBP income? Ask us that how much is the stock is getting sold. This is the PGBP when we sell our stock. So when we have sold our stock, we have sold our stock for 3,25,000. Okay. So it is my PGBP income is
Building placement is cost plus.
3,25,000 minus when this PGBP arises. See, first of all, it was a capital asset. It was a capital asset, and for many years we are holding it. And on the conversion, after this conversion, this became our stock in trade. After this conversion, it became our stock in trade. And how much we are selling it? 325. So what is 325? PGBP income. So you have to take PGBP expenses also. So will you take your real cost or you will take the value as on this conversion date? As on this conversion date. Because this area, you all know, this is capital gain area. This area, right? So correct. So this was PGBP once it is converted into stock. So your cost will become
3 lakh.
the fair market value, 3 lakh rupees. So it is 25,000. Short term, long term, no, it is PGBP income. So you have to show like this, and then you can show your final answer also that my PGBP income is this, my LTCD income is this. They are not asking about the total income. They are not asking about tax liability. They are just asking that under which head, what type of income I'll be having. Everybody understood?
Yes, sir.
Is it necessary to write those 2 lines that you wrote in the start?
I would recommend yes, because actually the question was framed in such a way they are asking that what type of income will arise, when it will arise. So we have to tell them that because this is actually the conversion of capital asset into stock in trade. So we will not arise it in the year when it is transferred. So we will wait till the time it is getting sold. So yes, I would highly recommend you should write this in here in this case.
Okay.
Okay. Question number 3. Okay. I'll read it, then I'll give it to you as an homework. Harshita purchased a land at a cost of 35 lakh rupees. She purchased a land at a cost of 35 lakh rupees in the year 2004 and 5, I believe long term, and held the same as a capital asset till 20th March 2024. So till 20th March 2024, this is previous year 23-24. Till here, till 20th March 24, she kept it as a capital asset. Almost a similar question. She started her real estate business on 21st March 2024. So for next day, she started her real estate business. Okay. And converted the said land into stock in trade for her business on the said date. So she was having a land. So earlier it was her capital asset, but what she decided, let us be the business, let us get into the business of a real estate. And what she did is she converted her personal land into stock in trade and converted the said land into stock in trade for a business on the said date. When the fair market value of the land is 210 lakh, the fair market value is 210 lakh. She constructed 15 floors or equal size, etc. First of all, tell me guys, when we have converted into the capital asset, at that time, the transfer is okay, but should we make it taxable as of now, or until they are sold, we will not make it
Until
taxable?
they are sold,
Until they are sold, we
Until
will
they
not
are
make it
sold.
taxable. Correct. She constructed 15 flats of equal size, quality, and dimension. Okay. On this particular thing, when she brought this into her business, so she constructed 15 flats on that particular land of equal size, equal quality, equal dimensions. Cost of construction of each flat is 10 lakh rupees. Okay. For each land, it is 10 lakh rupees is the cost. Construction was completed in February 2025. She sold 10 flats at 30 lakh per flat in March 2025. So what she did is she sold 10 flats for 30 lakh rupees. So how much flats she sold? She has total 15 flats and she sold 10 out of them. So can I say that 10 by 15th, that is 2/3 of her assets were sold. Agree? 2/3 of her assets are sold. Okay. The remaining 5 flats were held in the stock as on 31st March 25. So out of 15, 2/3 means 10 were sold, 5 were still held in stock. Okay. She invests 50 lakh rupees in the bonds issued by NHAI on 31st March 25 and another 50 lakh rupees in bonds of RECL in April 2025. Guys, she is investing in NHI also. She is investing in RECL also, Rural Electric Corporation Limited. Please tell me, are they both eligible investment or not? And under
Yes,
which
sir.
section? Under which section?
Yes, sir.
54
54E.
EC. 54 EC. 54 EC. And can you tell me what is the maximum amount of investment we can make in 54 EC?
50 lakh.
Very good. 50 lakh. And how much is the time limit we get to make this
6
investment?
months.
Only 6
6
months.
months.
Only
5
6
years.
months from the date of transfer. So we get only 6 months. We have to invest. We have to keep our money invested. Correction, Samanu, for 5 years. But we should invest this money in 6 months. Okay. Guys, 54 EC is available to all the assessee. It is available to all the assessee if they have sold. What they have sold? Land or building. If they have sold land and building, then 54 EC would be there. If you have sold your jewelry, if the assessee has sold of any precious, semi-precious stone, so they will not get 54 EC. 54 EC is only for if you have sold your land or building and then there is a capital gain. Then only 54 EC would be there. So in this case, this person has actually sold the land. So 54 EC they can take. Now, compute the amount chargeable under capital gain and business income in the hands of Mrs. Harshita along with the above transaction for this assessment year, including clearly the reasons for it. Okay. So here again, what we need to compute? Compute the chargeable capital gain and business income in the hands of Harshita. So we need to compute the capital gain. We need to compute the PGBP income. Everybody understood? So what are we
Yes, sir.
doing? So what are we doing? We have converted our land into stock. As of now, on the date of conversion, we will not do anything. But whenever this land will be sold, or whenever this stock would be sold, there we will be arising the capital gain tax. Okay, with me, guys. Question number 3. Okay. Computation of income. Whatever is the name of the assessee, assessment year 25-26. This assessment year will make it taxable. First of all, capital gains. First of all, capital gains. How much capital gain will arise? So in this year, please tell me full value of consideration?
210 lakhs.
Okay. Full value of consideration. Please tell me, as of now, the capital gain will arise on the entire land or two-third rent land? Two-third, why? Because what is sold? Please tell me whether the entire land is sold or this land has 15 parts. This land has 15 parts, and out of this, 10 parts is sold. Guys, 5 parts are still not sold. So can we tax these 5 parts right now? Or only we will tax
No,
that
sir.
two-third? Only we will tax that two-third. Understood, everybody? Because we have not
Yes,
sold.
sir.
Because we say, see, what is section 45.2? What is conversion of capital asset into stock in trade? It will say, okay, don't worry at the transfer date. Whenever you will be selling it, at that time we will make it taxable. So he said, okay, so whenever I'll be selling it, please make it taxable in that year. So in this year, he sold 15. So we are making taxable, out of 15, he sold 10. So we will make it taxable 10. And what about that 5? Whenever they will be sold in future, we'll make it taxable there. So full value of consideration is how much? It was 2,10,000 for the entire land. It was 2,10,000 rupees for the entire land. Now please tell me how much is sold out of 15. Only 10 flats were sold. It was written somewhere. Yes, only 10 flats are sold. So only two-thirds of the property is sold. So it means that this is the fair market value of the entire land. And what you will take? You will take only two-thirds. Two-thirds, that is 10 by 15 of what? Of 2,10,000 to 10 lakh.
140 lakh.
So it is 540.
140.
Correct. So this is 140 lakh. This is the capital gain which will arise in this year, minus cost of acquisition. And since when it is getting transferred on 20th March 2024. 20th March 2024 is before Mrs. Nirmala Sitharaman's budget. So it means that indexation will also be there. And how much we have purchased it for? 35 lakh. Yes, 35 lakh is the cost for the entire land. 35 lakh is the cost for the entire land. And here we are actually making taxable only two-thirds. So cost of acquisition would be, it was total, it was how much? 35. 35 into 2 by 3. The cost would be 35 into 2 by 3. And since this transfer has took place before the budget of Mrs. Nirmala Sitharaman, so indexation will happen. So what is the indexation? In the numerator, what you will write? CI of the year of transfer. Please tell me whether this year is the year of transfer or this year is the year of taxability. It is the year of taxability. So what was the year of transfer? The year of transfer was when the conversion has happened. So the year of transfer was 20th March 24. It is previous year 23-24.
24.
So have they given the CI for 23-24? Yes, they have given 348. So 348 divided by, it was acquired in this year, divided by 113. So 348 divided by 113. CI of the year of acquisition divided by CI of the year of transfer, etc. So it was 113. How much it is?
71.85.
How much you are saying, Abhinay?
71 lakh 85,840.
85,840.
Okay, why I'm
840.
getting it incorrect? 113. Correct. 71 lakh 85,000
840.
840.
840. So this was the cost at the time of conversion. Now see if there is any improvement happened. I don't think that there is any improvement which has happened. No, I don't think that there is an improvement. Is there any expenses on transfer? No, there were no expenses on transfer, nothing. So they have not given these things. So simply my capital gain is coming as
68,14,160.
68 lakh 14,159 or 160 I can write. Okay. Now in this case,
Sir,
correctly
what
put them.
about the construction of flat?
Okay, so construction of the flat has happened. Please tell me before the conversion into stock in trade or after the conversion.
After conversion.
So actually, it is the expenses on the stock, not on the expenses on the capital asset. Everybody understood it? So first what we did is, first we purchased the land in 2024-25. Sorry, in 2004-5. We have purchased the land. Then we have converted it. So here, till here only it was a capital asset. And as soon as it is converted, it loses the capital asset identity. And now it becomes stock. So after that, we are actually spending on the construction. So what are we spending on? We are spending on our PGBP expense. We are not expending our capital gain expenses. Understood this one? Guys, understood this? Since now there is a capital gain which is now there, and are we investing some money anywhere else also? Please tell me, this is the capital gain. Can we reduce it? Can we neutralize it? The answer is yes. Because why? They are telling us that we have invested in bonds of NHI, we have invested in bonds of RECL, and how much? 50 lakh and 50 lakh they have invested. And when they have invested, see, it is on 31st March 2025 or April 25, before the 6 months they have invested it. So how much investment? 50 and 50, 100 lakh is the eligible investment, but we can't give 100, we can give maximum 50. Understood? So less exemption under section 54 EC, A, gross capital gain. How much it is? 68 lakh 14,160. B, amount invested in 6 months. Amount invested in 6 months. How much it is? 50 and 50, 100 lakh.
100 lakh.
But C, we have a fixed limit of
50 lakh.
50 lakh. Whichever is lower, so this is 50, this is 100 lakh, this is 68 lakh 14,160, whichever is lower. So 50 lakh will get the deduction. And our capital gain income is, this is capital gain, and you all know it is long term, right?
18 lakh 14,000.
18 lakh 14,160, correct, Bala? Everybody done?
Yes.
Yes, sir.
Okay. Now, see, I have taken all these things of 2/3 only, right? Not the entire cost, only 2/3 cost. Why? Because my sales is also 2/3 and my cost should also be 2/3. Now, we are computing our PGBP income also. PGBP income. And how many flats you will calculate? 10 flats. Not 15, 10 flats. The PGBP income. Okay. So we are selling this. How much we are selling it? See, she constructed 15 flats of equal size, quantity and dimension. Cost of the construction of each flat is 10 lakh. This will also be my cost, normal cost of PGBP, 10 lakh rupees. Construction was completed in February 25. She sold 10 flats at 30 each. And she sold 10 flats at 30 each. The company remaining 5 flats were held as stock on this date. Okay. So she sold 10 flats at 30 each. So what is the selling price of PGBP? She sold 10 flats of 30 lakh each. $300 lakhs minus cost. So just see what are the costs which you are incurring. So first of all, we know that whenever this capital asset is converted, the fair market value becomes the selling price of capital gain. The fair market value becomes the selling price of the capital gain, but it becomes the cost of the PGBP. So what would be the cost? It would be 2/3 only. 2/3 only. And how much was the total cost? We have already also computed. The total cost was 35 lakh into 2/3. Everybody understood? Because why? Because here also we have taken 2/3. Here also we have taken of 10 flats. So here also we will take the cost of 10 flats only. Is it, what was the conversion?
35 lakhs per flat, right?
It was 210, sorry. Cost was 210 lakh into 2/3. This is the fair market value on the conversion date. So this would be 140 lakh this minus business expenses. Why? Because they have incurred some business expenses also. These all things, 10 lakh rupees per flat is the business expenses also. So he has incurred for 10 flats he has sold. So for 10 flats, the business expenses would be 10 flats into 10 lakh, 100 lakh. Understood, Abhirami? This would be the business expenses, not capital gain.
Yes, sir.
Now, any other expenses? 10 lakh was the expenses, 30 lakh she has sold. No other expenses. No other expenses. So our PGBP income will become
60 lakhs.
60 lakh. So they were just asking that what are the income which we'll be having. So we can say it at the last that capital gain we have is 18 lakh 14,160 and PGBP we have 60 lakh. We don't have to do the total. So they were asking just about our income. Everybody understood this? It was
Yes,
a good question. It was a good question. So please remember, here only 10 flats are sold. Out of 15, only 10 flats are sold. So you have to take everything of 10 flats only. So if you are taking the selling price of the 10 flats, you have to take the cost also of the 10 flats. 2/3 means 10/15. Out of 15, only 10 flats cost needs to be shown over here. So the fair market value on the date of conversion was 210 for the entire thing. For the entire thing, but we need the cost of only 2/3. This is the cost. Everybody's okay? So
Yes,
we'll do
sir.
some more questions of capital gain tomorrow and day after tomorrow. Then we'll shift to the next chapter. Thank you so much. See you tomorrow at 7:30. Bye.
Thank you, sir.